Well, everybody, while I am sorry that we did not record on Monday, I am also really glad we waited until today so we could see the market reaction to the government shutdown yesterday evening. And I'm just going to say, it is bullish. I have not been this excited in quite some time. This is me excited. But the S&P 500 closed at fresh all-time highs today. Some key names within the indice broke out above overhead resistance that has been plaguing them for months. And the daily candle close we just got a few minutes ago on Bitcoin and Solana is one of the most bullish daily candle closes I have seen all year. I think the crypto space is ready to catch up, so there's no time to waste. Let's dive right into it. I didn't even write a script today. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to The Trading Apologist. My name is Tom, and thank you all so much for tuning in today. Before we dive in, if you do find value in the content, likes, comments, subscribes are always very much appreciated, especially with how new the channel is. If you came over from seeing me on DCA on Monday, welcome. The normal rhythm of the show is that I post a weekly outlook on Mondays and then a recap of the trading week on Fridays, and then I do some smaller check-in pieces in the middle of the week just to keep everybody updated. But today we delayed things because it was kind of an odd week with the end of the month and the looming government shutdown, and we learned so much from that government shutdown and the market reaction to it today. So it is time to just get right into the charts. Normally I'll go over a bit of the macro, but since we have the Friday show just 2 days away, we're going to get right into the charts and just look for the key names that really moved. And I think it's time to pay attention, guys. It's time to make your plan, to get positioned, to look for those pullbacks and good entries, because this could really be a meaningful few weeks ahead, particularly for the crypto space. So let's dive right in. Okay, starting on the S&P 500, and you can see that all-time high daily candle close. We almost closed into the highs of the day. So you can't say with the government shutdown yesterday that we had a bearish reaction today. That was clearly the market and people voting with their money that they are not concerned about this. The truth is in the charts, and it doesn't matter how bearish news might sound on MSNBC, by YouTube commentators, by folks on X. If the money is flowing into an asset, people are voting with their dollars, and that can be the arbiter of truth. So the markets, people broadly speaking, aren't concerned with the shutdown. As I mentioned on DCA Live on Monday, the 20 weekly moving average is where the street steps in to buy. Retail is leveraged to the gills and is highly exposed. We know Wall Street is underexposed equities. So if we see a blip on the radar, some kind of garden variety 3 to 5, 3 to 8% correction, that would be where I would expect buying to step in. But right now, for the near term, I think it's all green, all good. And if we turn on the 20-day, that's where the street, where you and I normally step in to buy. And we saw that happen again last Thursday. If we flip over to the Nasdaq, very similar story. Not quite as strong, just eking out all-time highs, but for all intents and purposes, this chart is looking good as well. Okay, before we get into any other names, we have to talk about NVIDIA because this is the story of the week. Yesterday, we broke out of key overhead resistance at $185 that had been keeping a lid on the price for almost 2 months. And the reason this is so significant is because NVIDIA had been lagging the semiconductor space. TSM, MU, many other names have already broken out well into fresh all-time highs. And there was some sector rotation, but if we really want to see a meaningful bull run continue, we need NVIDIA as the market leader to continue to move and money to continue to flow into that. Now, are you going to see the biggest percentage returns in NVIDIA? No, it's a $4.5 trillion company now. It's not going to double in the next month. But if you can look for some solid adjacent plays in the semiconductor space, there is clear demand there. And we'll go over some of those on Friday. CoreWeave, for instance, had a great move this week on a partnership deal with Meta. So there are players that are moving. In terms of overhead targets for this, Now, we are struggling a little bit at the 187 level. This was a fib extension that I had drawn in from months ago, way before this run. I think I was actually just projecting it off of this little consolidation zone. So that's been giving us just a bit of trouble, but I think we'll be able to push through that in the next couple of days. And then we're really looking to $200 overhead as that psychological level, and then 210 and 220. So 210 would be right around here, and then 220 overhead would be my near-term extension targets. But if you do run a more aggressive extension, there is a target around $256, which would be quite an impressive move for an asset this large. But again, I would go on the more conservative side of looking between 200 to 220, just to have your expectations in line and then see how the charts are looking from there. Okay, the other big story of the week has to be Tesla, because Tesla, while on the daily, it was fairly overextended already in terms of RSI and mean reversion, it has been in this consolidation pattern and it broke out to the upside. So often when you get these kinds of conditions on Tesla, as in right here on this peak with RSI and mean reversion, you will cool off for a bit. But there are instances in a very hot rally like we saw at the end of 2024 where it will have this run up for 3 or 4 days, consolidate for a couple weeks, and then have a double pump, another move to the north side. And it very much appears that that is what is happening right now. So let's get into the 4-hour to talk about what we can potentially expect. So on the 4-hour, you can see that the RSI and mean reversion has already come down and reset a little bit. We've started moving back up on this breakout. There is an underside uptrending support on the 4-hour RSI that we didn't quite get into. So that's telling you just how strong this move is. I would have honestly expected a bounce off of that, but that's okay. We're just moving on. And if we're looking to overhead targets, the very conservative extension from here would be right at that $500 level, right here. And there is a little bit of overhead resistance just looking at daily candle closes from previous all-time highs. Be looking to that $480 to $490 level as a bit of resistance. And from there, if we can really move past that $500 level, if we did a 100% extension from this last move, so we're just projecting the time and the price of this move into the consolidation, back out of it, that would have us at $517 by the 8th of October. So it could be a very quick move to get us there. That would be towards the end of next week. So keep an eye on this to see what it can do. But if we got to that point, I would have to imagine, if we go back to the daily, that we are going to see some kind of cool off after a big double pump like that. And I would love to see Tesla just more gradually stair step its way up to higher prices, build solid structure on the way up. But we didn't get that. We got another crazy move up, followed by what looks to be the start of potentially another crazy move up. And that means markets don't like abnormal moves. We'll probably see a move in the opposing direction. And then we just look for support, I would say around this $420 level and down below just at the previous peaks at 370. But it would take a lot to get us back down there. Let's say 420 and then 390 in between would be areas to look out for when we eventually cool off. But if there was just one asset I could trade or trade options on for the rest of my career, it would be Tesla, because of this volatility and because of the liquidity in the option space. You can always get a fill. Okay, moving on to the other big story of the day, and that is Bitcoin. We broke our previous swing high and a major hurdle at 118,000. We closed above that, and we're back into the upper band on the confluence model. We also broke our daily downtrend on the RSI, which has been a downtrend since the 13th of July, my birthday incidentally. Happy RSI peak birthday. So we are shifting into positive momentum for Bitcoin. If you look at the 4-hour chart, we definitely are getting overheated on the 4-hour. So could we go a little higher? Could we go to that 120 level? Sure. But I imagine we would see a little pullback by then. And as long as we hold, I would say above 114,000 roughly, we're still in great shape. And I would be looking for long entries. I don't need the 4-hour to get into oversold conditions, but I would be looking to the 1-hour chart to be getting into oversold conditions to look for a long entry. But the other very bullish thing for Bitcoin, if we just look on the weekly time frame, and I covered this a little bit on Monday on DCA, but if we look at the weekly RSI, we also right now look to be breaking out from that downtrend on the weekly RSI. And the reason I say look to be breaking out is because we still need this to print on Sunday evening to prove to us that it is a valid breakout. But if we are just going back through time, this is one of my favorite indicators on Bitcoin. When you compress the weekly, and we really have to compress the weekly to see this entire bull run from the end of 22. So in 23, as we hit from 15 to 30K, and we bounced around between 15 to 25, between 30 to 25 to 30, back to 25. We consolidated for months, and the week that we broke out on the weekly RSI was right before we started this massive uptrend. Then we had this oh so painful 8 months of consolidation. And same thing, right? When we got to the end, when we broke up, that marked the next leg higher for Bitcoin. And again in December to January, and then cooling off into April, the week we broke that weekly RSI overhead resistance was the end of that corrective period and the start of the next meaningful move higher. And it appears to me that we are in the process of doing that right now. So watch this weekly candle close on Sunday, and that could mark the start of an exciting few weeks ahead, maybe a couple of months for Bitcoin. And then the other line I'm looking is this overhead downtrending resistance, this massive bearish divergence that we have had for Bitcoin. So let's just make that green because anything above that would be considered bullish. And if we can get above this diagonal green line, of course I have a horizontal green line contending with us now, let's change that. If we can get this green downtrending resistance, that in my opinion would correspond to a parabolic phase in the bull run where prices just shoot up in a fashion that we really haven't seen in this more measured bull run. So let's see if Bitcoin can do that, but that seems to still be a couple of weeks away. All right, if we look to Solana and we start on the weekly for this massive bull run we've been in, our weekly RSI peaked on this first run up from September 23 to March 24. And we have been in a daily downtrend on the RSI, and we have been in a weekly downtrend on the RSI for Solana ever since that point. And we already broke out a few weeks ago on this last run up. So Solana's in a good position. We didn't even fully backtest this. Our weekly candle was into this last week, but ended up closing much stronger with the turnaround. But on the higher time frames, Solana is looking good, and it also rebounded back into the upper band of the confluence model. If we look at it on the daily, it was really stuck between 4-hour support and daily resistance. So we had daily resistance overhead at the confluence model center cloud, but also at this fib level, the 618 at 216,000. And then we had support underneath on the 4-hour chart from the confluence model lower band and the 50% level. And we were just in a period of indecision, and that broke bullish after the government shutdown. And this is really looking quite positive right now. We also reclaimed this trend line, I suppose, that we broke down from on the daily. But these diagonal trend lines, I don't put nearly as much weight in as the horizontal trend lines. The horizontal support and resistance should always be what you put most weight in. So Solana, for all intents and purposes, is looking quite good. And I'm also looking for a reset on the 1 hour chart to scout a long entry. And I would say we wouldn't want this to go under 205 on a pullback, which is that 50%. Anywhere below there would be a little weaker and would start breaking down this nice structure that we have built. But ideally, if we are maintaining strength, if we could bounce either at 210, let's say, or right up here at 214, 215. So just for round numbers, we're looking for 205, 210, 215 at potential bounce points if we come back down to reset the charts. But right now it looks like at least the 4 hour might want to run just a little bit more. All right, and going quickly to Ethereum. Ethereum had that major breakdown of the $4,000 level. We did reclaim that. We got into a little resistance today. This goes into the peak before all-time highs in 2021. It's amazing how those levels can still carry weight all these years later. And you can see how we actually kind of consolidated above and below and above and below that line. So that, let's just say 4,400 level, it's 4,380, but that's a key resistance. I think we'll get through this, especially if Bitcoin and Solana keep running. Now, if they do cool off from here, we would reject, and then we would be looking back to that 4,100 level for support. But this is looking weaker than the rest of the charts because we're still in the center band of the confluence model. So that's a major overhead hurdle. We need to pass this previous swing high at 4,700. I think we'll get there, but it's just interesting to see how strength shifts. Solana was the strongest. Then it corrected more and Bitcoin became the strongest. Bitcoin has been rebounding more quickly than Solana, maybe not percentage-wise, but if we're just looking at key levels on the charts. But Ethereum has been lagging both of those. So Ethereum was the strongest in midsummer, and to summer it shifted to Solana. Now it's in Bitcoin. Maybe Solana can reclaim that, but if you watch the money flows and the strength moving to asset, it sometimes makes sense to pair trade and rotate your assets. But if you're perp trading, be in the assets that are moving that have momentum. It's the path of least resistance, and it makes your life a lot easier as a trader. Okay, moving on to Hood, which just won't stop moving. I don't have too much to say on this outside of how damn impressive it is and how it just defies gravity. We almost got to $150 today. And there is one fib extension that we drew months ago at $170. I think that's the 2618, if memory serves. I did not think we would get there, but now it's looking like it's marching its way up to that territory, which is just unbelievable. I honestly wish I wouldn't have taken quite as many profits in this territory, but I'm still holding a decent position in Hood. So I guess, I can't be too upset about it. But it is really remarkable just to see how long this has run. The other one that is starting to rebound that I just got into some calls on as we were in this area of support down here in early September, and then I just reloaded actually with a few more contracts last week, is Coin. And the reason I added more calls was because we were getting support at the top of this previous consolidation range. And we also bounced off of the daily RSI underside support, this uptrend here on the daily RSI. And Coin is one where these daily RSI uptrends really are important. When you break down from those, usually corresponds, just like we talked about Bitcoin breaking out from overhead resistance. For Coin, when you break down from those daily RSI uptrends, it's really over for that run and it has a meaningful correction. But this looks like it's going to play some catch up to Hood, and those calls are already performing nicely, and I can't complain about those. So if there's a little pullback, we're finding some resistance at this previous peak at 350 right now, it could be worth considering entry here because this can still run for quite some time. And it looks like it's going to run at least till November, just judging by history. All right, I got back into Celsius and I had to chase a little bit. I had a very small order fill here at $52, but I was predicting that we would take one more swing in the confluence model lower band. Normally you anticipate at least two swings, and we had a trend line down here for support, and we had a key level we were looking at $48. That just goes back to this previous range. That's very logical to me. I had a big limit order here at 48, but we didn't get there. So I had my small order fill at 52. And once we closed a daily candle, which was actually last Friday, right above this trend line, I got into some more Celsius just in terms of spot right now. If we do have a pullback and we find support anywhere around 53 or even down to 51, 52, I'd be really happy about an entry back down there. That would have me considering getting some calls again on Celsius because the strength is just showing in the chart with how quickly this rebounded. You might say, well, shoot, that rejection right there at those previous swing highs, those previous swing bottoms doesn't look too strong, but I would consider that a healthy correction. We were getting into the confluence model, upper band of the center cloud or center band upper boundary. We were also oversold on the 4-hour mean reversion dots. We need to cool off a little bit, but if you look at this on the daily chart still has a lot of room to run to the upside. And on this pullback, we actually just bounced from the upper band cloud right there. So this has me wondering, gosh, are we not even going to get a pullback for a better entry? And are we going to bounce from here if this is really strong? Something to look out for. Someone who's into Elliott Wave pointed out to me, actually from my Patreon, I'm so sorry I can't remember the username who called it out, but they were calling out an Elliott Wave 5-wave structure on the way up, which does seem valid. And they said this could be an A, B, C style correction, which could absolutely be something to watch out for. And if that happened, I would actually be happy about, getting a better entry at lower prices because I think this is still going to run into next year. The last thing I'll say, because I have been a little excitable today, is be careful with this one. I got in January in the low $20 range. I sold around $60. I'm not positioning as large now because as we're at higher prices, the risk is elevated. There isn't as much upside potential anymore. So I'm excited about this one. I think it has more upside, but it's not as large a position in my portfolio. It might only end up being, 2 to 3% of my overall holdings that I deploy into this, where it was closer to 5% previously. All right, one other one I just got back into, and I was playing Deckers in the spring and I was hoping for more of a recovery, and then their earnings still disappointed. But then this last earnings report in July beat expectations quite a bit, and we had this gap up, but there was still too much selling pressure. Buyers stepped in really strong around the $100 level. And I just got into some calls yesterday because we're into the lower boundary of the confluence model center cloud. We have this trend line. It hasn't totally been respecting it. So this diagonal trend line, take it with a grain of salt. But around that $100 level, I'm betting through these calls that we'll continue to see buying pressure here. If we drop this level, that's a clear sign that something has shifted. But the fundamentals are moving back in the favor of Deckers. They just got really beat up because they had a bad earnings call here where just the tone was that Nike and Brooks Running were cutting into their business. So investors already sold off. And a few days later, tariff talks started. And because of the overseas manufacturing, that really, it took them down from about 225 all the way down to 93. Just a massive drop on Deckers. But the other reason I'm getting in now, and my calls, they are for March 20th, 2026. So I have some time on them. $130 strike price. So I'm fairly out of the money, but we've gotten up to that 130 level before. So I'm betting on support coming in. Our daily RSI is to the bottom of the range. We haven't printed the mean reversion dot yet, so maybe we correct a little bit more, but I'm basically just betting on this changing structure and turning positive. And it is a little bit early days, but we did get a subtle higher low here. We also got a lower high. So we've just essentially been compressing in an ugly wedge pattern. I don't have all the signs of confirmation of a turnaround, but I've seen buyers step in over the last few months in this range. I know their earnings are looking positive. And their future projections are looking much better, and they've worked out a lot of the kinks that were caused by all those tariff terrors. So I think this one could turn around. Okay, just checking on one that we haven't talked about in a while, and that is SMCI. And they got beat up on their earnings call. I added some calls in this zone here as we were getting into the 200-day moving average and this fib level at 40, which are now doing quite nicely on this rebound. We had a massive day today, but there were already bullish news, I think it was last week, that they were acquired by ASST, I believe. Correct me in the comments if I'm wrong on that, for their Bitcoin holdings. And ASST has been beat to hell, but they are performing quite well right now. So in terms of the overall structure, even though this drop on earnings was quite bad, it doesn't look terrible. We didn't break these previous lows, and we have bounced from there. So I have to assume we're going to pass these previous highs on this next move up. We're into the upper band of the confluence model cloud again. And we have been targeting really passing this February 19th, 2025 peak. And I'm hoping we can get to the 100% extension at $76, which is still a good move away, almost a 50% move from where we are right now at 52, just a little bit under. What is that from today's prices? 47.62%. So pretty darn close. But if this has a pullback and bounces, if you're not in it, pullback and bounces off the $49 level, that would be a decent entry to consider. And then you have just the invalidation of these previous swing lows, the 618 fib level, to get you out of the trade. The one thing to look out for in the near term is that the 4 hour is a bit overheated. So this should cool off a little bit and maybe it'll give you a chance for that entry. But we got into this squeezing pattern on the 4 hour on the confluence model bands, which normally indicates volatility. That has resolved to the upside. And then, we can project out our center clouds like that. And if we bounce around, we would imagine that we take another couple swings in that upper band. Okay, just really quickly, UPXO looked like it was breaking down last week. We had this massive wedge pattern and we broke to the downside. And now with Solana recovering, we had a gap up open and we retested the inner band of the wedge as support. Couldn't quite get above the 50%, but we're trying. So watch this. This is a good sign of strength and reversal for UPXI. And if Solana continues to perform well, I imagine strength will come back into this. A riskier play, but it can be a meaningful play because this moves quite a lot percentage-wise. We're at 655 right now. And our next fib level overhead is almost at $9. Okay, one other trade I took earlier this week was QUBT, which is a bit risky because it has lagged the rest of the quantum names and they have seen some profit taking and some selling. And this broke back into the symmetrical triangle pattern that it broke out from. But in terms of the general structure, it is still making higher high, higher low, higher high, higher low. So as long as we bounce, before $16.50, the positive structure could still continue. And outside of the breakout from the wedge, you can also see that we have a cup and handle pattern in play here. And so that would be targeting roughly $40, $39. And the price target from the wedge would be at $45. So I don't know if this can run if the rest of the quantum space is cooling off or selling off. But I just have my alert set to tell me to get out of the trade if my thesis invalidates. And that would be, right below these previous peaks. If we got down to $16, I would be stopping out somewhere in there. Okay, last one for today, which is Circle, which I got into a trade this week. I've been in a trade, but I added to my position. So we had this falling wedge break positive. I was already in some calls. I have some January 2026, and then I have some, is it April or June 2026? Somewhere late spring, early summer. I need to look again. Anyway, the reason I added was because, we have the $200 price target from this falling wedge. I guess 176 would be the conservative price target, but we've recovered. We've made clearly higher highs than all these highs right here. We then printed a higher low and we were into the Confluence Model center band support. So I added to my calls, and these were the more January ones that I added because I'm just playing the short-term bounce with those. Now we found a bit of resistance, but we're chopping around, and it seems like we're pushing towards breaking up into an expanding upper band on the Confluence model. We were oversold on the 4-hour, and we are moving on up. You could project out already that there might be some underside RSI support. We really need a third touch point to confirm that, but if we correct a little bit more and we bounce from that point, that would be extra confirmation for me. And maybe that has us coming back to near levels where I just got into my trade. Like we could chop down here and bounce back up. And if that aligns with a bounce, then you at least have a solid trend line to rely on the RSI. And if and when that eventually breaks down, can be a very good guide for you to get out of the trade. So that's it for the charts. Normally we cover many more names, but today I really just wanted to focus on the most important assets that we need to be paying attention to because of what they showed us over the last couple of days. If you do have a chart request for an asset that you want me to look at, put that in the comments down below and I will add it to the list for Friday. But until then, I'll see you on Friday for the weekly wrap up. Bye for now.